Hello, everybody. In today's globalized world, the economies of the various countries are interconnected. Whatever happens in the economy of one country, that affects the economies of the other countries as well. So, today's lecture is related with the Indian economy. In this lecture, I am going to discuss the impact of a policy rate hike by the US Federal Bank on Indian economy. यूएस फेडरल बैंक के द्वारा जो पॉलिसी रेट में इंक्रीज की गई है, वृद्धि की गई है, उसका भारत की इकोनॉमी के ऊपर क्या इम्पैक्ट पड़ने वाला है या क्या इम्पैक्ट पड़ा है. दिस इज व्हाट वी आर गोइंग टू डिस्कस इन टुडेस लेक्चर. सो इन माय ओपिनियन, this lecture is very much important from the perspective of the UPSC and State Civil Services Preliminary and Main Examination. तो चलिए पहले हम जानते हैं यूएस फेडरल बैंक द्वारा जो पॉलिसी रेट में वृद्धि की गई है या जो इंक्रीज किया गया है. सो फर्स्ट ऑफ ऑल वी विल नो अबाउट दिस. सो बाय द इन द last we can say approximately 2 months, the policy rate has been hiked two times by the US Federal Bank. One is in April 2022 and the second hike is in June 2022, that is yesterday. Okay, in June 2022. Yesterday means on the 16th of June 2022. So, two times a rate hike has been announced by the US Federal Bank. So, a rate hike in April, that was the 50 basis points. 50 basis point means 0.5%, and a rate hike in June, that is the 75 basis points. So the total rate hike in approximately 2 months, that is 125 basis points, that is 1.25%. This is equal to this. So first question is, why this rate hike? So US Federal Bank has increased the policy rate in the wake of the high rate of inflation in the US market, which is 8.6% and is the highest in the US in the last 40 years. That is since 1982. This is the highest rate of inflation in US today. So in the wake of that, the US Federal Bank has increased the policy rate 50 basis points in April 2022 and 75 basis points in June 2022. So the total rate hike is 125 basis points, that is equal to 1.25%. And it is expected that in future also, probably in September and in December also, the US Federal Bank will increase the policy rates further. So this is there. So now the important question for us from the examination point of view is, what is the impact of this policy rate hike by the US Federal Bank on the Indian economy? So चलिए पहले हम ये देखते हैं कि इसका इंडियन इकोनॉमी के ऊपर क्या इम्पैक्ट पड़ेगा. As far as the impact is concerned, I have categorized it into two main groups. One is the direct impact and second is the indirect impact. Direct impact and indirect impact. As far as the direct impact is concerned, it is the impact on fund flows or capital flows in the Indian market. Fund flows or capital flows. And the second direct impact or the visible impact, that is fall in the value of money. Fall in the value of money, which is known as the depreciation of Indian rupee in comparison with the US dollar. Okay, money here means Indian rupee in comparison with the dollar. So as far as the indirect impact is concerned, indirect impact. So what can be the indirect impact of the policy rate hike by the US Federal Bank on Indian economy? So first impact would be there on bond yield. We will discuss all these points in the next part of the lecture. One impact is on bond yield, and another impact is on foreign liabilities, foreign liabilities of India, foreign liabilities of India, and one more important impact, that is on the import bills of India, import bills of India. And the next impact would be on the negative balance of trade, negative balance of payments, current account deficit, and the fiscal deficit. So these are the some of the impacts related with the you can say trade and the fiscal policy of the government of India. So this is there, and the next impact would be there on the foreign exchange reserves of India. Okay. And next is inflation, means impact on prices in India. And the last impact, if this trend continues, then there may be the socio-political, socio-economic and political impact of this move also. Socio-economic and political impact. So that can be there. Okay, so these are the various impacts which can be there on the Indian economy as a result of the hike in policy rate by the US Federal Bank. So I am going to repeat these points. One is the direct impact and second is the indirect impact. As far as the direct or visible impact is concerned, so there I have mentioned 2 points. One is impact on the fund flows or capital flows in the Indian market, and second is the fall in the value of Indian rupee in comparison with the dollar, or depreciation of Indian rupee in comparison with the dollar. And various indirect impacts, that is impact on the bond yield, effect on the foreign liabilities of India, then effect on the import bill of India, then impact on the balance of trade, balance of payments, current account deficit, and fiscal deficit of the country, then impact on the foreign exchange reserves, then effect on the price level in India, and then socio-economic and political impact as well. So let us discuss all these points one by one. So first is capital outflow from India. So as far as I have told you that one impact is on the fund flows, or we can say impact on the capital flows as well. Okay. So what can be the impact on fund flows in Indian economy or the capital flow in Indian economy? So there can be impact in two ways. One is the inflow of funds. As far as the inflow of funds is concerned, and the second is the outflow of funds from India. So it can be in two ways, outflow of funds. Okay, we know that let me explain this with the help of an example. Let's suppose this is US market and this is the Indian market. Indian market. Okay. So when the rate of interest in US market is low and it is higher in the Indian market, so then the investors usually borrow money from the US market and they shift that money for investment into India. So they spend it into, they invest it into India. Okay. So here I am talking about the foreign institutional investors, foreign portfolio investors. Okay, I am talking about those here. Okay, so they borrow money at low a rate of interest from US and they invest that money in India to earn profits because in India the rate of interest is comparatively higher than that in the US economy. So this way they earn money, they make profits, they gain from this transaction. Now when the rate in the US economy is higher, okay, so then what will be there? So then new funds would not flow into Indian markets because all earlier the investors who were borrowing from the US economy at low rate of interest for investment in India to earn profits, so they would prefer to invest their money into the US market now. So one clear impact that would be a fall in the inflow of funds into India, fall in fund inflows into India, fund inflows in India. So this is one clear impact of this. Okay? And similarly, what is there now when the rate of interest in US market is high, so the foreign institutional investors or foreign portfolio investors would like to withdraw their investment from India and they would prefer to shift it into the US market because there the rate of interest is higher and they would gain more by investing into the US economy now. So that is why the foreign institutional investors or foreign portfolio investors would start selling their securities, withdrawing their monies, and shifting that money into the US economy. So, what will happen with this? So, increase in it will increase in capital outflow from India. Capital outflow from India. So these are the two clear impacts on Indian economy as far as the uh, increase in the policy rate by the US Federal Bank is concerned. Okay, so I am summarizing it here. One is inflow of funds in India. Second is outflow of funds from India. So inflow of funds in India would fall and outflow of funds from India would increase. So this is the clear impact. So that means the foreign capital investment in India would be worstly affected in a summarized manner if I would like to conclude it. So the second impact that is uh, the increase in bond yield. Okay, so as far as this is concerned, so the bond yield would increase. Okay, so how the bond yield would increase? Because on the one hand, the inflow of capital has reduced in India. Inflow of capital will reduce in India with the hike in the policy rate by the US Federal Bank. And outflow of funds from India would increase. So then what is there? Usually, government issues bonds which are known as the sovereign bonds to borrow money from the foreign markets, okay, which are known as sovereign bonds to borrow money from the foreign markets. Okay. Now, with the increase in the policy rate by the US Federal Bank, so investment in India would not be beneficial for the foreign investors. So that is why the issue of the sovereign bonds by the government of India would fail to attract the investors or would not attract the investors now. So in that case, what the government would do, the government would try to increase the bond yield to increase more investors, okay, from the foreign market. Bond yield means to increase the rate of interest or rate of return on bonds. Okay, to increase the rate of interest or rate of return on bonds to attract more investors from the foreign market. So this is there, and this will obviously increase the fiscal burden over the government of India. So this is the point here. And next impact is, that is the direct impact, that is the depreciation of rupee. Okay. So as I have already told you, because now with the increase in the policy rate by the US Federal Bank, inflow of funds in Indian market will reduce, and the outflow of funds from Indian market would increase. So fall in inflow means less dollars will be coming in India, and more dollars will be leaving India now. So that means demand for dollars, demand for US dollar would be more than the demand for Indian rupee. Demand for US dollar would be more than the demand for Indian rupee. So in that case, the dollar price would increase, means appreciation in the dollar price, in the exchange rate of dollar, and the Indian rupee, the value of Indian rupee would depreciate. So appreciation in dollar, depreciation in Indian rupee. So this will lead to that. Okay, let me try to explain it with the help of an example so that it may be clear to you. So let's suppose earlier 1 US dollar was equal to rupees 40. It means an Indian person or some individual uh, was required to spend rupees 40 to purchase 1 US dollar from the market. Okay. And today, because dollar has become dearer in comparison with the Indian rupee, so now let's suppose to purchase 1 US dollar, a person, you can say, uh, will have to sacrifice, okay, 50 Indian rupees, let's suppose, pay 50 Indian rupees. So this is what we say the depreciation in the value of rupee, depreciation of rupee, or fall in the exchange value of Indian rupee in comparison with the dollar. So this depreciation of rupee will have many other implications as well, which we will discuss in the next part of today's lecture. So now let us move on to the next point. It is rise in foreign liabilities. So when the dollar has been appreciated, okay, and the Indian rupee has been depreciated, so it will lead to increase in the foreign liabilities of the government of India. How the foreign liabilities would increase? You know, from the international market, the government of India would borrow in dollar terms usually, though masala bonds are there, in which case the Indians borrow the money from the foreign market in terms of Indian rupee, but those are not that much popular. Usually from the international market, we borrow in the dollar terms only. So let's suppose $1 at the time when we borrow money from some foreign lender. So at that time, $1 was equal to, let's suppose, 40 Indian rupees. Okay. And suppose the government of India has borrowed 1 lakh dollars from the international market. 1 lakh dollar means the government of India has borrowed rupees 40 lakh in Indian terms, we can say, in terms of Indian rupees. Okay? So भारत की सरकार ने इंडियन रुपीस की टर्म्स में 40 लाख रुपीस बोरो किया है, 1 लाख डॉलर, which it has borrowed from the international market that is equal to rupees, that is equal to 40 lakh Indian rupees. Okay. So now the dollar has been appreciated or the rupee has been depreciated, and now the exchange rate of $1 is equal to rupees 50. Okay, so now the principal amount which India has borrowed from the international market, which is 1 lakh US dollars, so that liability has increased to rupees 50 lakh only due to the fall in the Indian rupee or depreciation of Indian rupee. So this way, what is here? What can we say that the debt liability of debt liability of government of India has increased in this case. Debt liability of government of India has increased in this case. So this is important point. Okay? And similarly, let's suppose the government has borrowed 1 lakh US dollars from the international market, and the rate of interest is 2%, let's suppose. It means every year the government would have to pay $2,000 as a interest. $2,000. Okay. So now when the exchange rate was of $1 was equal to 40 Indian rupees, the total liability of the government as far as the interest payment was concerned, that was equal to 80,000 Indian rupees. So that was the total liability on account of interest payable to the foreign lender by the Indian government. Okay, so this is there, and now when the rupee has been depreciated, so the same interest amount, which is equal to $2,000, so that would increase to 1 lakh Indian rupees. Okay, so this way, what is there? So increase in the principal amount as well as increase in the interest amount. Increase in the principal amount as well as increase in the interest amount. So this way, the foreign liabilities of the government of India would increase. Okay, and similarly, the corporates which have borrowed from the foreign markets, their liabilities would also increase in the same way, and that would lead to more stress on the balance sheets of corporates. Okay, so that will lead to more stress on balance sheets of corporates as well. Balance sheets of corporates. So this point is also important here. So next impact which would be there, a rise in imports by India. Rise in import bill, it is more appropriate to say that is rise in import bill. So let me explain it. So as far as the rise in imports or import bill is concerned, we know that you can say from the foreign market we purchase in dollar terms. Okay, so I am again taking the same example. Let's suppose $1 is equal to 40 Indian rupees. Okay, and suppose we borrow uh, goods worth rupees 1 lakh dollar from international market. So because $1 is equal to rupee 40, so in terms of Indian currency, we would have to sacrifice what rupees 40 lakh in terms of Indian currency. We would have to sacrifice that amount of money, that is rupees 40 lakh Indian rupees we would have to sacrifice now. Okay, and let's suppose the dollar has been appreciated and rupee has been depreciated now. Now $1 is equal to rupees 50. So in that case, so some Indian buyer would have to sacrifice 50 lakh rupees to pay to purchase the same amount of goods from the international market. So in nutshell, I can say that imports become costlier, or imports become dearer. Imports become dearer. So in this case, there may be two types of decisions by the Indian buyer. So one decision that can the Indian buyer may decide to reduce the amount of imports, and second, the Indian buyer would have to pay more money on imports. Would have to pay more money on imports. So as far as India's case is concerned, India is mainly an importing economy. India is mainly an importing economy. So we used to import mainly fuel, which is there, and we used to import fertilizers. We used to import technology. We used to import that is edible oils, and we used to import a lot many other things also. So it means India's imports are already more than the exports of India. So in that case, what will happen? So import bill would increase. So I can say increase in import bill. So increase in import bill. So this increase in import bill would hit the Indian economy badly. So one impact is this, I can say. So rise in imports, uh, import bills, okay, which is paid by the India. So imports will become dearer in this case. So the next point which is there, that is a positive impact on exports. As far as the impact on exports is concerned, it may be either positive impact or it may be a negative impact as well. So first of all, let us discuss about the positive impact on imports. So let's suppose $1 is equal to rupees 40, Indian rupees, okay, 40. So suppose uh, worth rupees 40,000 goods from India are exported to some country outside, okay, 40,000. So the foreign buyer of Indian goods would have to pay how much? That is the uh, $1,000 he would have to pay now. And after the depreciation of Indian rupee against dollar, suppose now $1 is equal to rupees 50, and to purchase the same 40,000 worth of goods, the foreign buyer of Indian goods would have to sacrifice $800 now. So what is the you can say impact in uh, nutshell, or what is the net impact? So it means exports exports have become cheaper. Exports have become cheaper. So if exports have become cheaper, it means for a foreign buyer, it would be cheaper, beneficial to import goods from India. So what will happen? So the exports from India would increase in this case. So next is the negative impact on the export also. So how the negative impact on the export? So I would like to mention here in terms of the manufacturing or production. In terms of manufacturing or production. Okay. So we know that India imports technology, India imports some minerals, India imports fuel, India imports fertilizers and so many other things. So with this, what would happen? There would be increase in the cost of capital equipment uh, and inputs. Increase in cost of capital equipment and other inputs. Capital equipment and other inputs. So this cost would increase here and other inputs. Okay, so this will lead to increase in the cost of production. This would lead to increase in the cost of production. So increase in cost of production means increase in the price. So if the price increases, then in that case, the exports would become dearer here. And if the exports have become dearer, it means for an Indian buyer, for a buyer of Indian goods, if he has to pay more dollars now for purchasing the same worth of goods from India, so then it will lead to discourage of exports. Okay, so there will be both positive as well as negative impact on export here. Okay, so now we have to see first whether the positive impact is enough to you can say neutralize the negative impact. Okay, so one is that, so net impact on exports will depend on that, and second, net impact on trade will would depend on whether the positive net positive impact of exports is higher than the uh, you can say the negative impact on imports, the negative impact on imports. So this will depend on that. Okay? Negative impact on imports. So the as far as the India's balance of trade, balance of payment is concerned, or current account deficit is concerned, so those will be affected by this. That how the impact on exports is going to offset the impact on imports. So, or how the impact on imports is going to offset the impact on exports. So the net result would depend on that. Okay, so this is there. But let me tell you that because India is known for IT services, known for export of IT services. So in this case, the revenue of India in this case would increase. But India is a major importer also as far as the fuel is concerned, as far as the technology is concerned, as far as the minerals is concerned, as far as the fertilizers are concerned, and as far as many other goods are concerned. So in that means uh, our imports are more than the exports. So that is why the net result on trade would remain negative. So next is increase in trade deficit. Okay, so here I would like to mention one is the trade deficit, means balance of trade. So you know the balance of trade can be either positive, the balance of trade can be either neutral, means zero, the balance of trade can be positive, negative as well. So what do we mean by the positive balance of trade? Positive balance of trade is when our exports are more than our imports. So that is the positive balance of trade. Neutral balance of trade is when our exports are equal to our imports, and negative balance of trade means when our exports are less than our imports. So this is the negative balance of trade, which is known as the trade deficit also. Trade deficit. Trade deficit. So as we know that India is mainly an importing economy, so that is why with the increase in the value of dollar against the value of Indian rupee, or with fall in the value of Indian rupee against the value of dollar. So the trade deficit or the negative balance of negative balance of trade or the trade deficit would increase. Trade deficit would increase. So this is one impact here which we have discussed. And similarly, next is that is the balance of payments. Balance of payments. Okay. So in the similar way, like the balance of trade, it can be positive, it can be zero, or it can be negative. So balance of payments will be positive when our exports will be more than our imports. It will be zero when our exports will be equal to our imports, and it will be negative when our exports would be less than our imports. So because again I am telling here, because India is mainly an importing economy, we import more than we export. So that is why the negative balance of payments of India would increase. So negative balance of payments would increase. Okay. And similarly, we will discuss about the current account deficit. Okay, so while current account means the account of transactions of our country with other countries. So that is what we mean by the current account. Okay, so current account includes the trade also, payments on account of trade also, and current account includes the payment on account of other obligations and the receipts on uh, account of other than trade also. Okay, so other obligations like uh, grant, payment of grant to some country, okay, payment of uh, debt to some country, or advancing money to some country, uh, credit to some country, payment of interest, you can say payment of the principal amount of debt which is payable by the government of India, we can say that, and similarly you can say the receipts in the form of grants from other countries. Similarly, you can say interest earned by India and received from the foreign countries. So that is there, and remittances by the Indian diaspora working abroad. So it covers all these things. So, and the major component in the current account deficit in the current account is also that of the trade. So because we are mainly an importing country, so that is why imports would, you can say, increase. Sorry, the import bill would increase in that case. Import bill would increase. Okay. So if the import bill increases, so then in that case the current account deficit is expected to uh, increase further. Okay. And similarly, the fiscal deficit. Okay, fiscal deficit of the government of India. Fiscal deficit is the uh, difference in the or net of the expenditure and receipts by the government. So when the expenditure increases the receipts by the government or the income earned by the government, so then we say that there is the fiscal deficit. So because now the government would have to pay more on account of debt liabilities, would have to pay more account of debt liabilities. Government would have to pay more interest on money borrowed from uh, abroad, would have to pay more interest, and similarly the bond yield would increase as we have already discussed. So all these would increase the expenditure side of the government, and that is why the fiscal deficit would increase further. And similarly now there will be the impact on the forex also, means foreign exchange reserves also. So we have to pay the import bill in dollar terms. Okay. So if the imports would become dearer and we would not be able to find the uh, alternative of those imported goods from the domestic market, so then we have to pay more dollars for importing the goods from outside the country. Okay, so if we will pay more dollars for importing the goods from outside the country, so that would lead to more, you can say, payment of dollars or withdrawal of more dollars from the chest of the central bank, that is the Reserve Bank of India, and that may lead to fall in the foreign exchange reserves of the country, which is considered not good. So next is inflation in India. So inflation can be two ways. One is because the imports would become expensive. Imports would become expensive. So one is that. And the second thing is that the capital equipments or uh, other inputs for manufacturing the goods or for producing the goods in India, which we import from other countries. Okay, so that will also increase. So import expenditure will increase, and next, capital equipment and other inputs which are used in the production in India, their cost would also increase if we import those from other countries. So by both these things, what would happen? It will lead to increase in price level in India. It will lead to increase in price level in India. Price level in India. So with the increase in the price level, what would be there? There will be a fall in the fall in the living standards, fall in the living standard of the average or below average people, of average or below average income people in India, below average income people in India. So that will be there. So it it may lead to more poverty, and it may lead to, you can say, a discouragement of the investors. And if it sustains, then it may lead to fall in the then it may lead to fall in employment as well. If it sustains there, fall in employment as well. So this is how it will uh, affect the price levels also. Next is widening of the fiscal deficit. This we have already discussed. And next is socio-economic impact. Okay, we know that if the imports bills would increase, okay, so the there will be a rise in the general price level in our country, a rise in general price level in our country, a fall in inflow of foreign funds, fall in inflow of foreign funds, foreign funds in India, and capital outflow means capital flight from India, capital flight from India. It may lead to that capital flight from India. So what will happen? There may be one impact, that is uh, higher prices, means inflation in India, higher prices. Second impact can be shortage of goods, shortage of some goods because of the higher prices. And third would be due to the capital outflow from the economy, and due to the less incentives for investors to invest in India, there may be fall in, there may be rise in unemployment. there may be a rise in unemployment or no increase in the rate of employment in the country. Okay, so rise in unemployment. The fourth impact would be fall in GDP, which is the per capita income, we can say also. And the fifth impact would be increase in household expenditure. Increase in household expenditure. HE means household expenditure here. Household expenditure and fall in the living standard. Fall in living standard. So that would lead to less investment on education and health. So all these things may create a number of socio-economic problems. That is the that is the restlessness in society, problems of law and order in society, increase in the social evils due to the, you can say, economic distress on the citizens. So that is there. And if the socio-economic impacts prevail for long, so then those may lead to political instability as well. So these are the impacts in the long run if the situation does not improve. ओके सो ये था आज का लेक्चर, जिसमें हमने डिस्कस किया है कि अगर यूएस का फेडरल बैंक पॉलिसी रेट हाइक करता है तो उसका भारत की इकोनॉमी के ऊपर क्या इफेक्ट रहता है या क्या इफेक्ट रहने वाला होता है. So ये I have tried to explain it in simple terms with the help of examples. Even if anybody has any doubt or query, you can write in the comment box, please. I would definitely address your query. So आज के लिए इतना ही. कल फिर मिलेंगे किसी नए टॉपिक के साथ, किसी नए लेक्चर के साथ. So all the best. Stay happy, stay healthy. May God bless you all. Bye for now. Thank you.